What is the best way to gain market exposure to high short interest factors? Is it through a basket of stocks in an index, or is there an ETF associated with this factor?
Well, this is a great question. No, there's not I don't believe there is. Now, correct me if I'm wrong. Obviously, can be wrong on anything that comes out of my mouth, and I have no teleprompter or somebody auditing it in real time like in my ear. So if there is a high short interest factor exposure ETF that I don't know about, please send it to us. I would be interested in breaking that down before I think about executing on that. Maybe I'll create one myself.
Ooh, I like that idea.
Yeah, I like that. I just came up with an idea.
I'm surprised nobody's created one.
I think that there's something going on in Hedgeye on the asset management partnership side with some quad type stuff.
Actually, imagine the squeezes that could happen if we had a high short interest.
Oh boy, oh boy. Guys, can you show the factor exposure table? I wanted to go through this today anyway. Can I doodle on this? Okay, so today, good lesson today, because today you get to learn about what's in the early look if you don't subscribe to the early look because you're being too cheap. All right, here you go. Now, in education, you got to pay for some of it. So here we go. This is what I walked through in the early look note this morning. Now, you asked about high short interest, so let's do that one. High short interest is a factor exposure, right? SI is the factor exposure. High short interest on a trending basis. And again, we're using trend because we made the call, again, more than 6 months ago, in November, as a matter of fact. So more like 8 months ago, going on 9. Be long of quad 2. In quad 2, we want to be long of high short interest stocks, highly leveraged stocks, small cap stocks. So again, this duration is what matters for the full cycle investor, because this is the full cycle return that you have been realizing because you are longer term than the person who's trying to chirp me on gold short term, right? If you've been long gold, low beta, long-term bonds, awful on that duration relative to high short interest up 24%, high beta up 34%, okay? This is just playbook, all right? So how do we check that every day? Well, we look at it on a daily basis. I'm always contextualizing in the early look. We call macro Mondays at Hedgeye. I'm focused on this duration, the 1 week. But yesterday on the day, if you're long a bunch of high short interest stocks versus low short interest stocks, you won the day. Just like a hockey game, now that I'm using my son Jack as an example. I always tell him, you may not be the biggest, definitely not the biggest. You might be the smallest, but you're not going to lose all these little battles all over the ice. The more battles you win, the more likely it is that you win the war. Okay, buddy? So if you can win that one, that's great. Yesterday, same thing. Up 0.5 versus up 0.2. Who won that battle? Enterprise value. Who won the battle yesterday? You know it. It shouldn't offend people. They shouldn't be triggered by me on Twitter. They shouldn't call me and my family names and have to get an alarm system, a new one on my house. You should get educated at how the game's really played, right? That's important. Some hedge funds, one in particular, told me this morning, well, hey man, nice calling this high beta versus low beta, but my boss says that I got to be neutral on beta. I'm like, well, that sucks. There's never been a more obvious opportunity to front run the machine and capture factor exposures in rate here and now this year, right? You wouldn't have the AMCs going on. You wouldn't have the GMEs going on. You wouldn't have whatever, BlackBerry going on if the machine wasn't rolling people right over in terms of actually not changing as the game has changed. So again, that's a real important thing. Slide 4 on the macro deck, that's why we always start with it. The game has changed, therefore we have evolved alongside it. I mean, it's not something that's new. Being captain of the universe stock picker guy, when I started in this business, back when that chart starts, a little earlier than that, it was fine. There were more hedge fund assets that could bully positions around using block trading and get their positions out there. Now you can't. You get bullied by the machine. The edge is in not being dogmatic. You know what dogmatic means? Being some version of your former self. Look at the survivor bias of the captain stock pickers out there that run hedge funds. The game has changed, right? This is what I love about America. It's capitalistic, it's Darwinian. It's again, the people that have figured out how to change as opposed to just being affected by their opinions of certain people that talk loud like me. I have to. I'm on this bloody channel. What do you want me to whisper? So this is where the game's at. I think that more and more of you are understanding that, and thank you for joining us, because it takes a bigger brain, actually, to be humble that you don't know about a lot of things that you could know about, and not getting upset about the people that have done better than you having evolved their process.